Everybody, welcome back to the Blacksmith Podcast. Of course, you know it's your boy Will B. I am going to finish up the last of this SoundHound AI's call. SoundHound AI, if you do not know, right now is going nuts in the
Perfect.
stock
I appreciate
market.
the added.
Hold on one second. And I don't have YouTube Red, so if it jumps on the commercials, so be it. Just bear with me. But SoundHound AI right now, if you take a gander at my screen, SoundHound AI is going crazy. If I pay my internet bill, okay, there we go. So it's up to 18 bucks in the last week. That's 19, almost 20%. In 1 month, almost 30. So SoundHound AI is going off. And one thing I try to tell you guys is to make sure you hyper concentrate, right? 700 shares. You're not going to do much with five of these and five of those and two of these. And and the most important thing is where you buy in at, right? So that's almost $10 worth of equity in each share, right? Hyper concentrate. And I still don't have enough for what I want for the price that this is, for where I can see this going to. But anyway, if you haven't seen part one of the video, don't even worry about it. I'll link it in the video. Go watch that one first so you'll understand exactly where we are. At this point, we've heard from the CEO, we've heard from the CFO, and they've started taking questions. All right. So here we go.
Color, guys. Thank you very much.
Thanks, Scott.
Our next question comes from Leo Carpillo at Joseph Gunner.
Taking my notes.
Good afternoon, gentlemen. Yeah, a couple of quick questions. First, regarding the guidance you gave for 2025, the revised one, two parts. First, I saw that you had a Q2 beat, yet the guidance doesn't reflect that completely. Is that part of the seasonality you talked about, or is it just an element of conservatism? And then secondly, is there acquisitions incorporated in this guidance, or is it just strictly organic?
Yeah, on the first part of that question, I highlighted it in the closing of my prepared remarks that I think there is a bit of lumpiness, and when we're dealing with major deals with major enterprises that are multiples the size of us, they can be big lumpy deals, and we saw some in our favor this time, but we don't, while we go and chase it every quarter, sometimes you get them, sometimes you don't. So there could be some natural seasonality there, and I think it's fair to say we want to be prudent, planners and set expectations and beat expectations, and that's the model we're trying to build for the long term. So that's probably baked into it as well. So all of that together, though, I don't want to back off the point that we're seeing tremendous momentum, and we want to really, the numbers we're talking about this year will pale in comparison to the numbers we'll talk about for next year and the year after that. And we're certainly on that pathway. And I think historically our growth organically of 50+%, and now with
I highly recommend
this is
you
what I
partner
mean.
with Elon Musk.
Sorry, I don't have YouTube Red.
It's too late.
And you know what? Normally, I don't even watch it on YouTube. I actually get the actual call. They send you an email, and I couldn't find the email, so I had to load it up on YouTube. That in the bottom left right here of the screen is the actual call. There's no commercials on that.
Other acquisitions, going even double of that, like that. That's a pace that we anticipate, for the foreseeable future. And we think, by the way, that's naturally attuned to how disruptive markets grow. Almost every cycle you see it in tech land. That's sort of how things play out. So to your second question then.
All right, he keeps stringing stuff along. Let me break this down, what he said. So the guy basically asked him, he's worried about the growth in the company. And he wonders if it was seasonality, like if you're a toy maker and December just hit and you're wondering, is all this growth coming from the fact that it was seasonal, right? Or is this sustained growth? Is this organic growth? And he just talked about we've had 50% organic growth, and it's not seasonal because the numbers we're talking about this year, one thing I'm telling you is that we will talk about bigger, larger numbers next year. So he is basically promising that this is organic growth and it's sustainable growth, which means then they have a repeat customer model. What am I trying to say? A subscription model where the customers keep coming back. right? You can make the best product possible, but if they buy one time from you and it's such a good product, like think of the iPod Classics, right? I don't have mine close. It's probably over there in my drawer, but the big, bulky, silver, like gray looking iPods, 160 gig. Once I buy that once from Apple, I don't need anything else, especially if I have my playlist set already. But if you keep buying music with Apple Music, then yes, you're going to need Apple. But if you don't need to come back for anything for that iPod, they only make a sale one time. So the way they get you is by getting a subscription model. It's great for business, it's terrible for the customer. It's just like Microsoft Office. You used to buy it one time, one fee, and that was it. And then they started a subscription model, I don't know, around 2019, 2020, somewhere in there. And so he's telling them, look, don't even worry about it. We got this.
The guidance as we give them this time and how we've given them previously, they don't contemplate additional acquisitions that we may look at or may add. We'll update you if those do come to bear, but they don't require it. They're not baked into our assumption set. We only kind of base it off of what's in-house currently.
Thank you. A quick question also on the Red Lobster account link. Could you give us some background in terms of how did that contract came about? I mean, given that the company was in bankruptcy, how it came out. Just interested to know the details.
Yeah, I could just say, we've actually had them as a partner for a little while, and yes, they went through their own journey. I can say personally in our family, we're big fans.
Journey.
But they've kind of maintained, and they're kind of back now, and so we definitely had our own journey working with them through their bankruptcy dynamics, and now sort of renewed energy in that partnership, and we're scaling, and so yeah, I mean, like a lot of I wouldn't just say it's specific to that one, but I would say in the restaurants, but even beyond restaurants, there's definitely a lot of companies that have been going through massive disruption, and we try to stay with them throughout whatever part of the journey they need. It does highlight, and it's not exactly your question, but I'll extend your question to this general point, which we said before around AI and automation. Depending on which direction you're going, AI and automation is really important. If you are a business that's challenged because of foot traffic declines or whatnot, you need automation for cost containment and cost reduction. If you're one that's seeing massive demand, you need automation to help you with throughput and speed of service and all those things. And again, those are the toggles that we provide across the board. And I think Red Lobster is no different than some of the other customers we've highlighted and that we work with.
All right, so he answered 3 questions from this guy, and this guy was very smart. He is very witty the way he crafted his question. He asked one question in the beginning, and then in a second follow-on question in that first question. He didn't give the floor back to the CEO, CFO, which was already witty, and then if I could, just another question real quick. And it's like his questions were good. They didn't mind asking another one. It didn't take too long. So he asked about Red Lobster. And basically what they just told him, yeah, they're going through a bankruptcy, or they were going through bankruptcy. Don't worry about it. We stick with our customers. You got to pay attention to this, because he is sounding the alarm. He's sounding a trumpet to everybody, right? He's answering the guy's question, number 1. Number 2, he's talking to other businesses, right? So he says, yep, they had some financial issues, and you know what? They were already a client of ours, and we stuck with them through that hard time. And he said, because if you look at it, and this is the best part to me, because if you know how to invest in the stock market, you can buy the stock low, right? And then when the equity starts rising, let's say it hits its 52-week high, and then you know how to trade options. You can throw puts on it, and you can ride the stock back down a little bit, so you can gain on the high side and the low side. So he said, when your business is booming, you'll need us in automation and voice AI. When you're down, you'll need automation and voice AI to cut costs and stuff like that. So he's showing that they are necessary no matter what's going on.
Well, thank you, and congratulations on the quarter.
Thank you.
Thanks, Leo.
Our next question comes
Come
from
on.
Mike Lattimore at Northland Capital Markets.
That's going to do it for this one. We're going to wrap this one up, make this one a short one. It's only about 10 minutes long. For more, follow the Blacksmith podcast. But if you have more questions on this kind of stuff, if you like this kind of content, hit that like button, subscribe, and share, please. And thank you. Y'all have a good one.